Hi, everyone. So today's training is going to be focused on all of those year-end wrap-up, cleanup activities that, that become an issue every January for most organizations. For the most part, these are things that have to do with the calendar year. There's one exception that I'll get to in a second. But that's why we're doing it in January, because the calendar year 2024 in this case, has just finished, and we're now doing our January housekeeping. Okay, so we're going to talk about three different topics today, and really the through line again is just that these are all things that most folks have to think about in January. They deal with different aspects of the software, different kinds of use cases and needs. But first is issuing 1099s. Second is thanking your donors for their gifts during the past year. And the third is closing your books. So one is kind of an operational accounts payable thing. The other is a fundraising thing. And the third is a real accounting thing. Okay, so first order of business, issuing 1099s. Now, specifically, when we're talking about 1099s in the context of MonkeyPod, typically we're talking about the 1099 NEC. This stands for non-employee contractor. These are people, usually human people, but I suppose they could be, like an LLC or certain kinds of organizations that perform services for your organization, but are not legally employees of the organization. Now, there are lots of different 1099s. There's 1099s that you're supposed to issue for gambling winnings or for rent or things like that. We're not concerned with those right now. We're just concerned with non-employee contractors, people who are not legally, technically employees, but who perform services for your organization over the course of the year. So first, when are you required to issue a 1099 NEC? And when I say when are you required to, I'm talking about the IRS rules, right? You have to file this with the IRS, and you have to also send a copy to the person who provided the services. So first off, it's services provided only. It's not if you bought goods from somebody, or again, some of those other weird cases like gambling winnings or whatever. This is none of those apply. This is just about services that were provided during the prior calendar year. They also have to total $600 or more, total paid to that individual payee, vendor, contractor, whatever, during that calendar year. Now, technically, $1 is taxable income for them, but the IRS only requires you to report it if it was $600 or more. And importantly, this works on cash basis accounting. So what do I mean by that? Of course, in MonkeyPod, we only normally support accrual accounting. Accrual accounting is, sometimes say it's like accounting for grown-ups, right? Accrual accounting is the only kind of accounting that's supported by GAAP and official, it's going to be your audit and all that kind of stuff is going to follow accrual accounting. Except that in some contexts, the IRS really cares about cash accounting, and that's in this case partly because, or mainly because, individuals are all on a cash basis for their taxes. So in any event, what does that mean in practice? That means that if a vendor or a contractor billed you $1,000 in December, but you didn't pay them until January, then the January year is going to be what's going to matter for 1099 reporting purposes. Even though in MonkeyPod you will have incurred the expense the prior year, for 1099 purposes, what matters is when you actually paid the person. Another important thing to know is that corporations are not eligible. Meaning you don't have to issue 1099 NEC to a corporation that provided you with services. Again, individual human people or LLCs, things like that. But if it's a corporation, whether that's a nonprofit corporation or a for-profit corporation or whatever, you don't need to worry about it. So how can MonkeyPod help you with this? Well, the main way we help you is that we can generate a file, a CSV file, just like a spreadsheet, that is kind of in an industry standard format for e-filing. Now, importantly, we're not going to e-file it on your behalf. We don't send anything to the IRS. We're not going to send anything to your contractors or your vendors. We're just going to give you that file that you can then use with any number of third-party e-file services. Track 1099 is one that we kind of like, who will do that filing on your behalf. However, there is one really important caveat, and when people run into trouble with 1099s in MonkeyPod, it's always about this last part, which is MonkeyPod understands the rules and can follow the rules and will enforce the rules, but only if you tell it what it needs to know, right? If you tell it who and what is eligible. So let's get into that. So first, I'm telling MonkeyPod who is eligible. So you may recognize this contractor card. This is one of the cards that can appear on a relationships page in MonkeyPod. Now, this is going to appear or not appear based on the relationships roles. So when you go to configure your roles, you decide, for people who have the donor role, I want to show these cards, and for people who have the employee role, I want to show these cards. Well, this is one of the options, and typically you would want this to show up for anybody who has like a vendor role or a contractor role, however you do it. And you don't need it for other folks, right? You don't need to worry about 1099s for your donors or your board members, typically. In any event, what's really important here is, what most important are the first and the third things, right? You have to provide a tax ID number, and that's either a social security number or an employer identification number. That's a tax ID number. That's how the IRS tracks taxpayers. And so that's got to be included in your 1099 filing, and we'll store that in a safe, encrypted way that is good for people's privacy protections. But we do need to have it on file. And then you need to tell MonkeyPod that this person is eligible to receive a 1099 NEC. And again, that's important in part because if they're a corporation, let's say, or something like that, then they're not going to be eligible. So we're only going to worry about people who you have specifically told us are 1099 NEC eligible. Now, the W-9 is kind of recommended. This is just a best practice. W-9 is a IRS form that's used for requesting somebody's taxpayer information, their tax ID number, their address, things like that. So a kind of good practice to establish, if this isn't already part of your workflow, when you have a new vendor, the first time you pay a new contract or something like that, just send them a W-9 or ask them to fill out a W-9, store it on file. That way you've always got backup information on their their tax ID, their address, things like that. So it's good to have that and uploaded and on file. But if for some reason you're able to get that information in other ways, the W-9 isn't strictly necessary. The other two are. Now, you also need to teach MonkeyPod what kind of expenses qualify as non-employee compensation. What kind of expenses are relevant to or meet the criteria for being included on a 1099 NEC. And the way we do that is through expense accounts, right? So you have different expense accounts on your chart of accounts in MonkeyPod. If you go to edit the settings on any of your expense accounts, you'll see this box here, the option to indicate, yes, this is applicable to such and such tax form. In this case, there's only really one option because that's the only one that we really worry about, but there may be others in the future. But for now, all you need to do is pick which expense accounts. Might be something like contractor payments or professional fees and contract labor or something like that. And you would indicate that that one maps to that box on the 1099 NEC. Now, once you've done that, if MonkeyPod knows what sort of expenses are 1099 eligible and who is 1099 eligible, then we've got everything we need to create that e-file for you, or that e-file download for you. Okay, topic number 2, thanking your donors for their giving during the prior year. And actually, just a couple of weeks ago, we introduced a new report. It's called the Year-End Giving Summary. Now, why might you need this report? Well, many organizations like to send out letters in January thanking, acknowledging their donors during the prior year. And what the standard practice is when folks do this is that they're going to kind of summarize their giving from the prior year. So, thank you for giving us $500 over the course of calendar year 2024. Many organizations, many organizations thank their donors kind of on a rolling basis, right? When I ran a large nonprofit, we issued tax receipts and thank you letters every 2 weeks year round. So there was nobody ever had to wait more than 2 weeks to get an acknowledgement of their gift. The IRS rules are, predictably vague. They use the word contemporaneous. So a nonprofit is required to provide contemporaneous documentation of gifts. That has generally been interpreted to mean like within the same calendar year or within the same fiscal year, but it's vague. And I think it's best practice if you can do it relatively quickly. I think that's a good practice for, legal and compliance reasons. I think it's maybe more importantly a really good practice for fundraising purposes. Either way, if you're not doing that, if you're not doing it on a rolling basis throughout the year on a per donation basis, then you really have to do it in January in a way that summarizes everything during the prior year. But if you are doing it on a rolling basis, then it's really up to you. Some people like to do it anyway. It's sort of legally redundant, but it still might be a good practice for fundraising purposes. Do you need this? Only if you're not. You only really need it if you're not doing tax receipts and thank you letters for gifts as you go. But it's always, it's never going to hurt to thank your donors an additional time. So I want to talk a little bit about how this differs from other reports in MonkeyPod, because there are some key distinctions, and it may confuse, may be confusing if you're seeing different numbers, right, in report A versus report B, and that's usually because they're telling you slightly different things. So first off, again, MonkeyPod only does accrual accounting, except when it doesn't. And it only doesn't do accrual accounting when it has to do cash accounting. So in this case, cash is the only thing that matters. This is, again, similar to what I said a few minutes ago with respect to 1099s. If somebody gives you a pledge in December and they don't make a payment on that pledge until January, right? That's going to show up in the calendar year of the January, not in the calendar year of the December, because all that matters to the IRS, which is sort of what this is about, right? You're giving people information that they can use for their own tax filings. All that matters is when the actual cash was transmitted from donor to the organization. So pledges don't count, but pledge payments do. This is the opposite of accrual accounting. And another important thing, unlike almost all other like fundraising reports in MonkeyPod, soft credits and householding don't matter. So if you're looking at like a top donors report in MonkeyPod, right, the people at the top of that list, we're going to be counting their cases where they have a soft credit. For example, when there's a donor advised fund that, it's not technically their money, it's technically Fidelity or Charles Schwab or whatever, or New York Community Trust, or but they still, it's their, they're the advisor on the donor advised fund. They advised the gift, etc. It does matter for fundraising purposes, not for these purposes, because you can't send, you can send them a thank you letter, but you can't send them a tax receipt because they already got a tax deduction when they donated to the foundation that's managing the donor advised fund in the first place. Similarly with householding, if you're aggregating gifts at the household level for fundraising purposes, doesn't matter. Not going to be included here. All that matters here is who actually, technically, legally, whose money was it that they gave you, and when did they give you the actual money, not the promise, but the actual money. So just things to keep in mind if you're looking at this and it seems to disagree with other reports in MonkeyPod or other data points. Okay, moving on to topic 3 of 3, which is closing your books. Now, this is, like I said, this violates a little bit the through line that I said we were going to have for this presentation, which has to do with calendar years. This one actually is a fiscal year thing, but I don't know, many organizations, maybe most, use a calendar year, fiscal year anyway. So closing your books. first, when does this matter? When is this something you want to think about doing? You want to do it after the fiscal year has kind of settled, right? Which means that there are not any new transactions that are going to be entered for that year. No changes are going to happen. Are going to happen. You know, people talk about doing this on a monthly basis, even, right? Like on February 2nd, you're likely not done with accounting entries for January. Maybe by February 15th, you are. Some organizations. Some organizations, you might not be done until June because maybe you've got a third-party bookkeeper who only enters stuff, every couple of months or something. So you're going to know based on your organization, like when have things, officially settled and are basically set in stone for that fiscal year, and that's when you can think about closing your books. Importantly, if you get an annual audit, if you're required to, or just do it for kicks, you want to wait until your audit is finished because usually the last step of the audit is that your auditor is going to give you some adjusting entries. Now, one caveat that I will offer here is if you misjudge this, right, and you say, I think that fiscal year is closed, we're settled, we're going to close the books for FY24, whatever, and then you realize that you're wrong, you do have to make a change. It's not hard to reopen your books. So this is a principle, but it's not like irrevocable or anything like that. It's not a big deal if you have to change your mind and reverse this. So why would you want to close your books? So closing your books, the thing that it does really is it basically says, I want MonkeyPod not to allow any accounting changes, any new accounting transactions, any deletions, edits, etc., to my numbers, my financial numbers from on or before this date. So if you close your books as of December 31, 2024, MonkeyPod will block you or any of your users or even automated processes from adding new transactions on or before December 31, 2024, changing any transactions that would where there would be an accounting impact. So that would mean changing the account on a transaction, changing the amount, something like that. If you just like are tagging something or something like that, that's not gonna be blocked because that's a management thing. That doesn't have a real accounting implication. And it's particularly important to do this after your audit is over or after your 990 has been filed, because what you really want to avoid is a situation where you've signed off on the audit, it's been published or whatever, right? And then you have to go back and say, oops, those audited financials are not actually accurate. These are the actual numbers. Your auditor's really going to hate it if you do that. So don't do that. So after the audit has been finished or after your 990 has been filed, it's a good idea to close your books. And from there on, that's going to prevent any intentional or accidental changes to those kind of final numbers. And so, whereas I said a minute ago, it's not a big deal if you need to reopen your books, I would say that is true, except in the case where you've filed your 990 or your audit. After you've done that and after you've kind of made your numbers official for the year, I would generally recommend, if you have to do an adjusting entry, do it via an adjusting entry in this fiscal year instead of last fiscal year instead, because you don't want to have to file an amendment to your 990 just because you've got some minor change or something like that. And then the other thing that this does is it basically sweeps your surplus or deficit for that, up to that point, right? Or since the last time your books were closed. Usually that means, for the fiscal year in question. It sweeps it into your long-term unrestricted net assets. So I'll show you what that looks like in a second. But how do you do this in MonkeyPod? It's really simple. This is under your organization settings, under the accounting tab. And basically, MonkeyPod will know when your books, if ever, were last closed, and it's going to give you the option of closing them as of the most recently completed fiscal year. We're not going to mess around with mid-year closures or anything like that. You really don't need that. You don't need to be closing your books on a random June 13th. You should close your books when a fiscal year is over and settled and done and does not need to be revisited. And that's what MonkeyPod will do for you. Um, so when that happens, this is an example of the kind of journal entry that gets recorded. Um, this would be an example organization that had a surplus for the year of $61,000 and change. And we're going to debit that, decreasing that net asset account, and credit the without donor restrictions net asset account. So that's like moving it from sort of short-term moving target kind of unrestricted net asset to, long-term slow changing without donor restrictions net asset. So that's what that's gonna look like, and you're not going to be able to edit this yourself. This is a sort of system-generated special entry. By the way, if you decide to reopen your books, this entry will be deleted, and then if you close it again, it'll be recreated. So that's what that looks like. And that's it for the structured presentation portion of this training. And of course, if you think of something 15 minutes from now, feel free to email support@monkeypod.io, and we'll get you taken care of.